So let's discuss about the short-term financing management. No? So as just a little bit of review of the past discussions that we had. So during the earlier weeks, we've discussed working capital management. We have identified that um, in managing working capital, we're actually trying to do strategies to manage current assets and current liabilities. No? So we've discussed cash management, AR or accounts receivable management, and then we also had discussed the inventory management. And then today we'll go now with the um, we'll proceed with the discussion of short-term financing management. So, of course, what are short-term financing ba? So, for example, no, we need uh, short-term financing. Where do we go to get this? So, una, syempre, doon sa mga uh, suppliers natin, no? So, by way of accounts payable or punta tayo sa banks, no? So, later on, we'll also cover that. So, number one source of short-term financing is accounts payable. So accounts payable, the major source of unsecured short-term financing. Now, so when we say unsecured, it's not it's short-term financing where there is no collateral, and that's why it's unsecured. No, so in accounts payable, there are different terminologies, no, that we're using. So number one, we have credit terms. No, so uh, say credit terms is usually expressed in say 2 over 10 net 30. No? So meaning if you pay within 10 days, then you'll get 2% cash discount, right? And then if you pay, uh, well, the terms is 30 days. No? So if you pay within 30 days, then there will be no discount. No? So we'll also, like I said, we'll talk about cash discount and cash discount period. No? So in my given example, 2 over 10. So 2 uh, is the cash discount, 10 is the cash discount period. So meaning, uh, if you pay within 10 days, then you'll get to avail the 2% discount. Okay? So later on, we'll discuss that further. So analysis of credit terms. So taking the cash discount, if cash discount is to be taken, a firm should pay on the last day of the discount period. So paano yan class, no? So puntahan natin to para lang mas ma-illustrate ko pa siya ng maigi. So remember yung example ko, no? So 2 over 10 and then N30. And ganyan usually yung presentation ng ng credit credit period, so credit terms. So you have the credit period, so meaning uh, if you pay within 10 days, so for example, no, date today is September 30. So from September 30, so if you pay from September 30 to October 9, so if you pay within this period, you get to have 2% discount. No? So what is this telling us? That if you're going to take the cash discount, you have to pay it on the last day of the credit of the discount period. No? So you have to pay here. Well, the reason being is that we're managing our cash flows as well. No? So while this is true that we're now looking into the short-term financing management, of course, there's the element of cash flow involved. So in this case, class, in order to maximize also the use of cash, No? So imagine class, no? So imagine we're talking of paying 10 million, no? 10 million pesos to our supplier. No? Instead of paying it to our supplier on day one, and we're planning to avail of the discount, we should pay it on the last day of the discount period. No? So meaning on the 10th day. Because if you pay on the first day or second, third, and so on and so forth until the 10th day, this will remain the same naman. So it's at 2%. No? So it won't change. Now, paano kung nagbayad tayo on the 11th day? So again, if you pay on the 11th day, you lose the 2% discount. Kasi nga, the discount period is within 10 days only. No? So meaning, punta na natin ngayon yung uh, next statement. No? So giving up cash discounts. If the firm has to give up the cash discount, it should pay on the last day of the credit period. No? So parang it's self-explanatory class. No? Of course, we're dealing with cash flow at the same time managing our short-term financing. So if we're not, if we're giving up this 2% discount, then by all means, we need to pay towards the end of the 30th day or on the 30th day towards the end of the credit period. No? Because, gaya nga sabi ko, if we pay on the 11th day or 12th day, parehas na yan eh. No? So, we're actually giving up the 2% discount already, no? Because it's only available if we pay within the 10-day period. No? So, I'm sure it's clear. No? I mean, like I said, it's obvious. No? Okay, so cost of giving up cash discount. Of course, last when we give up cash discount, there's this opportunity cost. No, there's a benefit that we forgo, no, for not availing the uh, cash discount. No? So what's the formula? So it's cash discount over 100% minus the cash discount multiplied by 360 over n. So CD is the cash discount percentage. N is the number of days payment can be delayed by giving up the cash discount. Now, ito class, take note, I use 360. But like I said, in our previous discussions and sessions, no, it will all be dependent um, on the information provided in the problem. So if the problem tells you to use 365, then by all means use 365. If it tells you to use 280 days, then use 280 days. Now, do not argue with the number of days in a year. Anyway, we're not being tested naman to know the number of days in a year. So, what I'm trying to say, it's all dependent on the information provided in the problem. Okay, so the above formula assumes that the firm gives up only one discount during the year. No? Of course, that's when we're dealing with suppliers, no, it can be um, in multiple times. No? So this formula, ang sinasabi lang is this is just for one time. No? So what if we're doing it continuously during the year? No? So we have to use then these formula. Anyway, don't worry. No? So we'll have discussion problems later on. Then we'll demonstrate all of these formula and concepts. No? So that's always our approach naman. All right, so let me continue. So stretching accounts payable, a firm should pay the bills as late as possible without damaging its credit rating. When a firm can stretch the payment of accounts payable, the cost of foregoing the discount is reduced. No? So paano yan, class? Imagine yung example natin kanina. No? So si Piolo na lang ulit. No? So si Piolo, purchase merchandise from sabihin natin Shaina. So amounting to 10 million. So si Shaina um, gave Piolo these credit terms. No? So sabi ni Shaina, if you pay within 10 days, then I'll give you 2% discount. No? Sabi ni Piolo, okay. Uh, but the 10 million will be due in 30 days. No? So yun yung arrangement nila. No? So ikaw, of course, no, sabi, we should stretch it, no, towards the, I mean, without, we should stretch it without actually damaging our credit rating. So, paano yan? So, si Piolo, kaya siya friends with Shaina, ganito ang ginawa. Uh, Nag-past due na. So, meaning, Piolo doesn't pay even after, or even after the 30th day, no? So, following month na, hindi pa rin nagbayad. So, anong ginawa ni Shaina ngayon? Hindi pwede yan. Sabi niya, hindi pwede yan, Piolo, ha? Although we're friends, eh, you have to comply with the credit terms, no, that we have agreed upon, no? So, sabi ngayon ni Shaina, hindi kita papautangan ngayon. So, imagine, no? So, yung damage, number one, damage sa reputation ng company because of the credit standing. No? And of course, if your reputation or credit standing is tainted, no, it will be difficult for you to transact with other players in the market. Of course, si Shaina is member of association. Sabihin na lang natin na this is in sabihin natin tobacco. So of course, even tobacco players, they have this association. Then Shaina will tell the other suppliers, no, sabihin natin si Casey. So Shaina tells Casey, ito pala si Piolo, he doesn't pay on time. So in fact, up to now, he owes me 10 million. Ganun pala sila magchismisan. No? So ako naman, I'm just exaggerating, no? Just to point out or just to emphasize a point. No? But I hope you understand, no? How um, how important to stretch the payment of our credit, but it's also as important as making sure that our credit standing won't be affected. Kasi nga, meron din naman siyang uh, adverse effect talaga, no, in terms of the company reputation and in terms of securing credits in the future. No? So, kaya sinasabi natin dyan, yes, you should stretch paying the bill as late as possible without damaging our credit rating. Okay, so that's accounts payable. Now, there's another source of short financing, which is bank loans. No? So, kasi hindi naman porke sinabi natin bank loans is it's always long term. No? So kasi 'di ba, remember palagi natin na pag-uusapan pag bank loans, uh, usually 10 years or more, no? Or 15 years, no? Especially if it's collateralized. No? Now, of course, there are also short-term loans, no, with banks. So, now, letter A, single payment notes. If the interest is payable upon maturity, the effective interest rate is equal to the nominal rate. O so class, siguro pag-usapan mo natin yung effective interest rate and nominal rate. Parang kasi nominal rate, wala na tayong dapat pag-usapan yan. This is the rate on the face of the loan. No? So kung ano yung naka-stipulate na interest doon, that's the interest rate. Now, when we're talking of effective interest rate class, basically we're including other elements of the loan. So say for example, we need to know whether the interest is being paid in advance or not. Kasi if it's paid in advance, then there's so-called discounted rate or discounted interest. No? So to discuss that further, letter B, discounted note, the effective interest rate is higher than the nominal rate. Why? So take note of the formula. The effective interest rate is equals to the interest over principal amount minus the discounted interest. No? So basically, class, in discounted note, we are paying the interest in advance. Now, take note also, if the term is less than a year, the interest rate is annualized. So, for example, um, the the loan is only for 6 months. Now, of course, um, if we're going to compare it with the nominal rate, which is expressed in annual terms, then we have to also compute for the discounted interest rate in annualized form. No? So later on, we'll also demonstrate that. No? So let's go over the theoretical part. No? So at this later, when we apply it in different discussion problems, it will be smooth. No? And then we can always refer back to the materials naman. And letter C, we've discussed this before on compensating balance. Parang ganito yung class, di ba? Sabi ko, uh, uh, balikan natin si Piolo kanina sa example natin para mas mabilis tayo. So, si Piolo, kailangan ng 10 million kasi niya magbabayad kay Shaina. So, si Piolo, pumunta ngayon kay BDO. Siyempre, yun yung ina-advertise ng bangko. No? So, uh, sabi ni Piolo, BDO, I need 10 million pesos. Sabi naman ng BDO, okay, we'll give you 10 million pesos provided you have to keep 10% compensating balance. Ano nga yung compensating balance? So it is an arrangement whereby a borrower is required to maintain a certain percentage of amount borrowed as compensating balance in the current account of the borrower. Question, class. Who owns this compensating balance? Is it Piolo or BDO? Okay, so the answer is it's still Piolo. However, it's restricted. So meaning Piolo cannot withdraw it until after he pays the full loan amount. No? So meaning until he's able to pay the 10 million, he cannot do anything about the 10% balance, no, as compensating balance. It will remain in his account in the bank. Okay, so that's compensating balance. So we'll go now to the different discussion problems. No? But take note, I put a note below. Don't forget to watch the recording for part 1 for more sample problems. No? Plus, I keep telling you, well, the best way to learn is to practice, no? And practice solving problems. So that's why, aside from the live discussions that I'm doing for you, there's also another separate discussion. No? Anyway, it will cover the same topics but different approach and different problems. So it will be beneficial to you to have a full understanding of the concept. So that's really the uh, best way to learn. Okay, so with that, let's go to discussion problem 1. So foregoing discounts on purchases. So let me read the requirement first. What is the nominal cost of this trade credit? So ito class, use 360 days per year. So sabi ko, pag sinabi ni problem na 360, do not argue. No? So let's use 360 days per year. So let me read the problem. Piolo Corporation needs to raise 5 million for 1 year to supply working capital to a new sales outlet. Piolo buys from its suppliers on terms of 210 net 30. Sige, pag-usapan ulit natin to. It just so happened that the terms here is the same with our example earlier. No? So 210 net 30. So meaning if Piolo pays within 10 days, he gets to have 2% cash discount. No? And if not, then there will be no discount. No? And he needs to pay within 30 days. And that's a credit term. Okay, so it currently pays on the 10th day and takes discount. Ito pa lang si Piolo, good payer, no? So he always pays on time, no? He always pays on the 10th day. So meaning he's always getting this 2% discount. He's taking this 2% discount, no? So tuloy pa natin. However, it could forego the discount, pay on the 30th day, and thereby obtain the needed 5 million in the form of costly trade credit. No? So remember class, um, Piolo requires 5 million kasi nga he needs it to supply working capital to a new sales outlet. So nag-expand pala si Piolo, there's a new sales outlet and he needs 5 million pesos to basically to sustain the operation, no? Para sa starting capital or in this case, working capital. Now, along with that, Piolo also has to pay for suppliers, no? So, and Piolo is paying always on the 10th day to avail of the 2% discount. So, ganun yung situation, no? So, ngayon, parang ang pinopoint out the problem is may requirement si Piolo na 5 million and yet Piolo always pays his supplier within the discount period, no? So within 10 days, no? So may option tayo na hindi magbayad, pero how much would be the cost of it, no? So ano ba yung uh, cost of foregoing the discounts on purchases, no? So pag-usapan natin 'yan. Let me go to the Excel file. So let's have discussion problem one. And uh, what I always do class, I just place the problem here along with the concept, no? Para at least side by side kita natin how to approach this type of problem. So palagi ko rin na approach is of course lagay yung mga pertinent data. So we have the principal or cash requirement of 5 million. Discount of 2%, days to avail the discount, 10 days, or sabihin natin discount period. And then, the credit is due uh, 30 days. No? And of course, N is the number of days payment can be delayed by giving up the cash discount. So that's 30. Diba? Remember, it, the credit is payable within 30 days, no? And then the discount period is 10 days, no? So ilang days ba yung pwede natin i-delay? So it's 20 days, no? So that's 30 less 10. So our N is 20 days. Now, let's apply the formula. So assuming class, no? So assuming ang bank loan natin is 10% annually. So para lang at least meron tayong point of comparison, no? Kasi ito naman yung standard practice, ano? So usually it's lower pa nga madalas. Ano? Okay, so let's have this formula, no? So CD or the cash discount percentage divided by 100% less CD multiplied by 360 over N, no? So of course, because we all have the pertinent information available, we can now derive the formula. So CD, this is 2% or this is simply the discount. O para hindi ka malito, I just simply put cash discount percentage. That's 2%. Of course, the denominator is 100% less the CD. So 100% minus 2%, so that's 98%. Okay? 360 is the number of days. Sabi naman dito, use 360 days per 360 per 360 days per year. So let me just check it. Okay, so still recording. Good. Okay. So 2 over 98% multiplied by 360 over 20. So we can now get 36.73%. This is the nominal cost of this trade credit. So meaning class, this is how much we can lose for not availing the cash discount. No? So imagine if we do not pay on the 10th day and forego the discount on purchases, effectively, we are losing 36.73%. No? So, yan tandaan na. So, the option available to Piolo is to go to the bank and loan for 5 million. Kasi nga, if he loans from a bank with 10% interest, 10% lang yan compared to the 36.73%. So, meaning it is best for Piolo to go to the bank and loan 5 million pesos for the working capital requirement for the new sales outlet rather than to forego the discount on purchases because effectively we are losing 36.73%, which is higher compared to the bank interest loan. So, technically class, ang pinakompute lang sa atin dito is the nominal cost of this trade credit, no? So, meaning, ito yung annual cost na nafo-forgo natin for not availing the cash discount, no? And simply, we compare it with the going interest rate for a bank loan, no? For short-term loan, no? Which is 10%. So, sinasabi natin, instead of not paying on the 10th day and use the money to finance the working capital for a new sales outlet, might as well go to the bank and loan for 5 million. Kasi nga, ang incremental, ito ha, pag sinabi natin incremental, is the difference between the two options. No? The incremental rate is 27.73%. So meaning, yun nga, paulit-ulit na ako, if we forgo, that will cost us 36.73%. And yet, kung pupunta tayo kay bangko, it will only cost us 10%. No? So, that's question number 1. Okay, so we go now to question number 2. So in question number 2, which alternative is the most attractive? No? So basically, we're given letter A, B, C, and D. Of course, we're going to calculate for the interest rate or the effective interest rate for each option. In option A, 12% annual rate on simple interest loan with no compensating balance required and interest due at the end of the year. Okay, ito muna para mas klaro. Letter B, a 10% annual rate on simple interest loan with a 20% compensating balance required and interest due at the end of the year. So later on, we'll also go over that one by one. Letter C, a 10% annual rate on a discounted loan with a 25% compensating balance. And finally, letter D, a 6% add-on annual interest payable in equal monthly installments. So Piolo Company is negotiating with BDO. Ito naman pala yun eh. For a 5 million one-year loan, BDO has offered Piolo Company the following alternatives. Calculate the effective annual interest rate for each alternative. So before we proceed with problem number 2, pag-usapan muna natin, no? Just a bit of illustration. So remember si Piolo. Piolo, ito pala karugtong nung pinag-usapan natin sa problem number 1. No? So remember, napag-usapan natin sa problem number one, instead of foregoing the cash discount, ituloy pala dapat ni Piolo yan, no? Instead of using that money to finance the working capital for the new sales outlet, ang advice natin is to go to the bank, no? To go to the bank and loan 5 million. So yan, para pala may ano tayo, para tayo may accounting serye. Sa accounting serye natin, punta na natin itong talaga na may accounting serye kasi dyan si Casey, dyan pa si Shaina. So, gusto niya, no? Okay, so remember si Piolo requires 5 million. Ngayon, si BDO, sabi ni BDO, sige Piolo, we can lend you 5 million provided there's a compensating balance. Ito na yung compensating balance. Sabi natin, compensating balance, basically restricted balance. No? So you can't withdraw it unless you pay the full amount of loan. No? So 20%. Question, kanina, tinanong ko na rin to, who owns this 20%? So in this case, who owns 1 million pesos? Again, it's still Piolo. However, it is restricted. No? So dahil nga restricted siya, it will remain in the bank. No? It will remain in the account of Piolo in the bank. No? So for example, di ba, napag-usapan din natin, the going interest rate is 10%. No? Sabi natin na interest on bank loan. Okay. So if the 80%, ito lang yung pwedeng ma-withdraw ni Piolo, the 20% represents compensating balance. Lagay ko rito. Compensating balance. 20%. Question class, ito bang 20%, pwede bang ipautang to ni BDO sa iba? Ang sagot is yes. Kasi nga, itong 20%, nasa bangko lang naman to. And the bank knows that Piolo can never withdraw it unless unless he's paid with the whole 5 million. So it will remain with the bank. Ngayon, itong si Casey, pumunta kay BDO. Sabi ni Casey, BDO, I need 1 million pesos. Sabi naman BDO, okay, I can loan you 1 million pesos provided there's a compensating balance of 20%. No? So imagine saan galing yung 1 million na pinuutang kay Casey. Ayun, no? Galing doon sa compensating balance na nasa account ni Piolo. Pwede bang gawin ng bangko yun? Pwede. Kasi nga, nasa kanila yung pera. So si Casey, nangutang ng 1 million kay BDO, again, there's a compensating balance of 20% amounting to 200,000. Question, who owns the 200,000? Is it Casey or BDO? So the answer is Casey. So again, it's compensating balance. It will remain on Casey's current account. It will remain in her bank account balance, and she can only withdraw it if she pays the whole 1 million pesos. No? Here comes Shaina. BDO, BDO, I need 200,000 pesos loan. Can you lend me 200,000? Ano sasabi ni BDO? Of course, we can lend you 200,000 pesos provided you keep 20% as compensating balance. No? So, again, ang tanong, ito bang compensating balance? Who owns this? Is it Shaina or BDO? Okay, class, paulit-ulit na tayo. It's still Shaina. No? And then, kung iba pang darating dyan, mahaba lang yung usapan natin. No? At I hope you get the point. No? So, compensating balance, this is a way of the bank to compensate, no, from these loans. No? In fact, they get more from uh, simply restricting these balances from being withdrawn. Okay? So pag-usapan ngayon natin how compensating balance impact the effective interest rate. So remember the formula earlier, we have the numerator for the interest rate, 100% less interest rate, sabi natin, if it's um, discounted interest na. So sabi natin, if it's a discounted loan, interest is payable in advance. No? So meaning, dinededuct na yan ng bangko sa simula pa lang, pag-issue pa lang sa'yo. No? So the proceeds of the loan, they're already deducted the interest. Okay? So if that's the case, then we have to deduct the interest rate here. So yun yung tandaan na, paano kung hindi? What if the interest is payable towards the end of the loan term? So therefore, you don't need to deduct it. No? So tandaan, kaya nga may asterisk doon, if it's on discount. No? So sabi natin, if it's discounted loan, interest is payable in advance. Alright? And then finally, less compensating balance. So tandaan, how will compensating balance impact your effective interest rate? Ayun, kasi nga, binabawas natin siya from the 100%. So, I hope clear na yung illustration. Let's go to problem number 2. So, problem number 2, basically, we'll just apply what we've learned during the illustration. So, remember, si Piolo pumunta kay BDO, and then BDO offered Piolo different alternatives. No? Tayo naman as financial managers or as accountant, we need to assess each of this option, each of this alternative, which one is the most attractive. No? So letter A, nandahan natin 12% annual rate on simple interest loan with no compensating balance required and interest due at the end of the year. So parang wala ka na ditong kailangang pag-isipan pa, no? Kasi it's 12%, tapos wala daw compensating balance, and at the same time, the interest is due at the end of the year. So therefore, this is not discounted loan. So therefore, the effective interest rate is 12%. So yun lang din yun. No? Okay. So letter B, 10% annual rate on simple interest loan with a 20% compensating balance required and interest due at the end of the year. Yan, sige. Remember dinideduct lang natin ng interest if it's on discount. So meaning, if the interest is payable in advance. Basahin ulit natin yung letter B. A 10% annual rate on simple interest loan with a 20% compensating balance required and interest due at the end of the year. So meaning, this is not a discounted loan. So therefore, what we need to deduct from our denominator is only the compensating balance. No? So 10%, no? So yan yung nominal rate natin. 100 minus 20. 20 is the compensating balance. No? So that's 10 over 80 or 12.5%. Okay? Let's go now to letter C. Letter C, a 10% annual rate on a discounted loan with a 25% compensating balance. So tandaan, this is now a discounted loan. So meaning the interest is payable in advance. So therefore, to calculate for our effective interest rate, so of course, 10%, the nominal rate, 100 minus 10% minus the compensating balance of 25%. So that's 10 over 65 or 15.38. So 10 divided by 65. 15.38%. So that's option letter C. Okay? So tandaan ulitin ko lang. The reason why we deducted this 10% here is because it's it's a discounted loan. So meaning the interest is paid in advance. No? So ibig sabihin lang ng class, uh, pagka-issue ng 5 million, dineduct na si interest, and then inalis na rin yung compensating balance. So therefore, mas maliit yung nakuha na proceeds ni Piolo. No? So not the whole 5 million. In fact, with the 25% compensating balance, the 25% uh, will remain in his current account. So he can't withdraw it. So paulit-ulit na tayo. Okay, so letter D, a 6% add-on annual interest payable in equal monthly installments. No? So ito class, medyo may kakaiba yung formula. No? But let me walk you through the procedure. No? Let's do this step by step. Natatandaan, this is only applicable when there is an add-on annual interest rate. No? So paano yun? How to compute for the effective interest rate? It's the interest divided by the average principal. But then, inisa-isa pa rin natin, no? Paano ba computein yung average interest? Ay, average principal in this case, no? So, ayun, nilagay ko sa ilalim. Average principal, para lang mas malinaw, it's beginning principal plus last amortization. Para lang at least mas malinaw, paano ba yung pag-compute ng last amortization? So yung last amortization, nilagay ko lang din dito, how to compute for the last amortization. Okay. So it's beginning principal divided by the term. So that's 5 million divided by 12 or 416,666.67. So meron na tayong last amortization. Of course, beginning principal is 5 million. So 5 million para mas malinaw. That's 5 million plus the last amortization. So that's 5,416,667.67 divided by 2, no? So to get the average principal. So that's 2,708,333.33. So that's the average principal. Yun. So now, of course, we can calculate the interest. So that's 5 million multiplied by 6%. 6% is the nominal rate. So therefore, 300,000 divided by 2,708,333 is 11.08%. So that's the effective interest rate. So plus, itong add-on annual interest, this is usually used to, ito yung in-offer na bangko for car loans, for condominium financing. So imagine, akala mo 6% lang. But in fact, the effective interest rate is actually 11.08%. So meaning it's more, Kasi di ba, parang very enticing. Bank will offer you, Piolo, you can loan from us 5 million and the interest rate is 6%. And ngayon kung si Piolo hindi nag-hire ng accountant or financial manager, malamang kumuha na siya agad ng 6%. And yet, nung tayo, pinag-aralan natin, that 6% pala is really not 6%, but 11.08% effectively. So now, we're able to calculate the effective interest rate for all the alternative. So we have 4 alternatives. Now, which alternative is the most attractive? Of course, yung alternative which will give us the lowest interest rates. Meaning kasi plus tayo nangungutang dito, tayo magbabayad ng interest expense, no? So, of course, punta tayo dun sa may pinakamababang interest rate, no? So, the answer is option letter D because it's only 11.08% compared to 12%, compared to 12.5% and 15.13%. Okay? So, um, tandaan, this formula is only applicable if it's add-on annual interest. Kaya inisa-isa natin siya. This, you'll be able to follow the procedure and it's also called highlighted just to make sure that you'll be able to recalculate it, no, when you do your review. Okay? Okay, so that's problem number 2 on cost of bank loans. Okay, so let's have discussion problem 3, cost of bank loans. The Piolo Company obtained a short-term bank loan of 10 million at an annual interest rate of 10%. As a condition of the loan, the company is required to maintain 20% compensating balance in its checking account. The checking account earns interest of 1% per annum. Before the loan was granted, the company maintained a balance of 200,000 in its checking account. The requirement is compute the effective interest rate for this loan. Sige, dandahanin natin to ha. Medyo complicated yung problem. Parang ganito yung class. Si Piolo, kailangan niya ng 10 million. Condition ng bank, kailangan merong daw compensating balance of 20%. Etong si Piolo, meron na palang maintaining balance doon sa checking account niya, no? Of course, hindi ka naman makakapag-loan sa bank without having your own account with the bank. No? So, normal yun. And of course, uh, for every, say, savings account, meron talagang maintaining balance yan. In fact, kung pag hindi mo nga na-keep yung maintaining balance, there will be charges, no, towards the end of the month. No? Kaya as much as possible, we keep the maintaining balance at the end of the end of the period, no, so that we won't be charged by different fees, no, bank fees. Okay, so ngayon, in relation to the 10 million loan, nire-require ng bangko na mag-keep ulit si Piolo ng 20% compensating balance. And remember, this 20% compensating balance will be restricted, no? So, hindi niya ma-withdraw at ma-maintain lang dun sa bangko. Okay? Ngayon, ito pala, yung palang compensating balance or yung maintaining balance earns 1%. No? So, itong 1%, ito yung interest income naman ni Piolo. Kasi nga, meron siyang pera na nasa bangko and it earns interest of 1% per annum. So, meron na tayong story. Alam na natin yung lahat ng given. Tignan natin yung Excel file natin. So, let's have problem number 3. So, in problem number 3, ito yung formula natin. Lagay ko lang din dyan para at least pwede natin, we can always refer back. No? Okay. So, we have the principal. Principal is 10 million. That's given. Interest rate of 10%, again given. Compensating balance, 20% given. Interest income of 1%. And then we have maintaining balance. Ito yung current maintaining balance natin. Hindi ko lang present para at least hindi ka malito. Present maintaining balance. Okay. Now, Pag-usapan ngayon natin itong compensating balance. No? So remember, one of the conditions, no, in granting the 10 million is to maintain 20% compensating balance. So 20% of 10 million, so that's 2 million pesos. No? So 10 million multiplied by 20%, so that's 2 million. Now, meron ka ng maintaining balance, di ba? So, ito pa dito. 200,000. So, magkano lang yung kailangan mo i-keep pa sa bangko? So, kung meron kang maintaining balance na 200,000, ang kailangan mo lang na additional compensating balance is 1.8 million. Paano na-compute yun? Remember, ang condition is to keep 2 million pesos in your bank account. No? And dahil nga meron ka ng existing account with the bank, so meron ka dun maintaining balance na 200,000. So therefore, meron ka lang kailangan i-satisfy na additional compensating balance amounting to 1.8 million pesos. So wag magpapalit of plus sa kinompute lang natin yung additional compensating balance. Tanong, na-violate ba yung condition ng loan to keep the 2 million pesos? Hindi, kasi meron ka ng existing na 200,000 dun sa account mo, plus magdadagdag na lang ng 1.8 million. So in total, it's 2 million pesos. And again, it's in line with the agreement with the bank. Okay. So bago natin puntahan yung formula, kaya ko in-highlight yan ng yellow, so para at least masundan kung paano ba na-compute yan. Plus here, yung interest dito is actually net interest. No? So meaning, we have the interest expense. Paano i-compute natin ang interest expense? So yun lang naman, simple interest. 10 million multiplied by the 10%. 10% is the nominal interest rate. No? So 10 million multiplied by 10%. So that's 1 million pesos. Now, paano natin ngayon kukumpitin yung interest income? So remember class, the bank pays us 1% interest. So meaning, nag-earn tayo ng interest income equivalent to 1%. 1% of how much? Of the 1.8 million. No? So 1,800,000 multiplied by 1%, so that's 18,000. Sabi nga natin, kinukuha natin dito is net interest. So therefore, 1 million minus 18,000, so that's 982,000 pesos. O sige, balikan natin class ha, at dandahanin pa ulit natin. Ang reason kung bakit natin dinededuct tong interest income is to get the net interest expense. Kasi nga, there's compensating balance involved, and this compensating balance earns interest income, kailangan natin i-account yun to get the effective interest rate. Kaya nga sinasabi natin effective interest rate. No? Technically, it includes everything else. No? Before, all of the items agreed upon or conditions for a loan. So there's the compensating balance, there's the interest income. Okay. So interest expense again 1 million. So that's 10 million multiplied by 10%. 10% is given kasi wag magpapalit to. That's the annual interest rate or the nominal rate. And again, the interest income, it's 1,800,000 multiplied by 1%. Question, bakit sa 1,800,000 lang tayo nag-compute? Bakit hindi sa 200,000? So remember class, we're calculating the effective interest rate for the bank loan. No? And also take note that we already have the 200,000 in the bank as our maintaining balance. So meaning, ito, walang kinalaman to dun sa kinakalculate natin na loan. Okay? And in order to satisfy the bank condition, para ma-grant yung 10 million loan natin. Sabi lang naman is you have to maintain 2 million in the bank, no, as compensating balance. No? Eh, syempre, dahil nga meron ka ng 200,000 existing or maintained in your bank account, so in order to satisfy the condition for the loan, so you only have to have 1.8 million additional in your bank account, no, as maintaining balance. Okay, so that's 1,800,000 multiplied by 1% interest income, no, or the interest of 1% per annum. So that's 18,000. Again, the reason why we're deducting it from the interest expense is to get the net interest expense. No? Okay, so okay na tayo dito sa 982,000. Ngayon, pag-usapan natin yung denominator. Denominator is principal amount minus the discounted interest, or in this case, additional compensating balance. Kasi there's no mention that the interest expense is paid in advance. No? So we can assume that it's paid towards the end. No? So it's not a discounted loan. Okay, so principal, so that's 10 million, it's given. There's additional compensating balance of 1,800,000. So therefore, it's 8,200,000. Okay, so that's 982,000 divided by 8,200,000. So that's 11.98%. Okay, so that's the effective interest rate. Okay, okay, class. This problem number 3 was previously uh, given in the CPA board exam. So it's a bit complex, but by working on it, no, step by step, no, using this procedure, it will become uh, easier, no? It's easier to calculate. And actually, that ends our session on short-term financing management. Like I said, this is just a short discussion. No? That's why I encourage you to watch the other recording for part 1 so that you'll be able to get more sample problems. No? In fact, we've already captured all the concepts on the short-term financing management, and this also wrap up the discussion on working capital management. So if you have any questions, please feel free to send me a message on chat or send me an email. My email address is flash on your screen. So once again, thank you for attending my class. Thank you for listening, and I'll see you again next session.
This is the Year Instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!